I'm Dan Fitzpatrick at StockMarketMentor.com on Monday, September 16th. We're looking at Apple. This stock, remember, I mentioned this is no big discovery on my part. Anybody with two eyes, actually even one, could see this. The 50 and the 200-day moving average were crossing over. This prior resistance here, once broken through, was also, you could say, support. There were just a lot of reasons for the, well, reasons. It was obvious that the stock was in an uptrend. Then they came out with their iPhone thing that just kind of put everybody to sleep, and oh boy, colors. The stock found some support here, and I know that we had actually had a bull put spread on this on Option Market Mentor. My sense was that, this looks like it's going to hold. It's still, definitely a trend break here. But, it looks like maybe this will hold up. So why don't we take a shot, put in a 460, 455 bull put spread. And today was, I suggested, and if you're an OMM member, you'll hear more of this in our strategy session tonight. But I suggested, you know what? We need to blow out of that short 460 leg. It's killing us. So let's hold on to the 455 leg instead. So suddenly now we've got a trade that's losing into a trade that's winning. Because why? Because we were wrong and then we were right. And what I mean by this, and I'm not talking about options anymore now, I'm just talking about trading. You're looking at this stock, it's your understanding that you think this stock is going to hold. So what happens? It opens up in the morning. We'll just use a 5-minute chart. So it opens up in the morning. It's trading at what? 461. Okay, that's where it opens. So let's look and see where that is back on the daily chart. 461. That's pretty much okay below the 50, but it's at the 200-day moving average. So maybe that's okay. I don't want to get shaken out of this stock, right? That's what you're thinking. Okay, so if we could ever have some quotes here. Thank you. Some price data. Anyway, so right away, though, the stock starts moving lower. And you're saying, you know what? I think this might be a problem. Wonder what everything else is doing. You know what I don't really care about is what the NASDAQ's doing. Because Apple, the NASDAQ 100, is because Apple's kind of such a huge component of that, that it's going to pretty much be doing the same thing. But I want to know what the S&P 500 is doing. So again, this is Apple. Gapped down and kept going. S&P 500 gapped up, held its gap. Dow Jones Industrial Average gapped up, held its gap. Thank you, Boeing, United Technologies. But the point is, right away, you could see, if you had a sense of the daily chart where you're saying this is support, but actually where is it really? Well, maybe right around 460, something like that. Then you're zooming in intraday, and you're seeing that the stock indeed was holding at 460, all the way up until the magical moment in time when it wasn't. That's when you sell this stock. So you would have known. And, I'm not talking about just Apple here. I'm talking about, I'm trying to help you apply these principles to your current trading, not like what you woulda, coulda, shoulda done on a stupid stock that gapped down and kept going today. But this is what you want to, these are the things that you want to be looking at. You look and see which way's the market going, which way's my stock going. My stock's going against me, and I don't like that. But let me look and see what the market's doing, because my stock, quote, going against me might just be giving me an opportunity to buy more. Or it might be telling me it's time to head for the exits. So what we saw here when we compare what's happening in the Dow, again, forget about the NASDAQ 100, but we saw what was happening in the Dow and the S&P relative to Apple. Now this thing breaks 460. You want to be out of this thing. And so when you see this type of a trend break with this type of configuration that I'm talking about, just kind of like sell now and ask questions later, because you can always buy it back. Happily here, you can buy it back at 440, probably even. instead of 460. So it's right to sell these weak stocks on days that are really strong. You just want to be out of there. So anyway, that's it. Members, I'm continuing our what I would call like portfolio building exercise, where we're going through the stocks that we looked at over the weekend. And we're going to go through those because we've got some pretty good action points on some of those. So we're going to be doing this thing right. We're going to build it up gradually as we go.